Okay, one of the big earnings stories we've been tracking in Canada this morning is Lightspeed, the point-of-sale software company coming out with better than expected results. And for some more on what's happening with the business, we're joined by Dax Dasilva. He's the CEO and founder of Lightspeed. Dax, always good to see you. Obviously, you've been very focused on improving performance in the business. What was going right in the last 3 months?
Yeah. Thanks for having me, John. Yeah, it's been exciting to sort of share the quarter with everybody. It's the first quarter of executing on our strategy that we laid out at Capital Markets Day, and so we're ahead of outlook on revenue, on gross profit, on adjusted EBITDA, and we delivered on customer locations, which investors are looking to see Lightspeed taking market share with 1,700 new locations, net new locations added in our growth engines this quarter.
And what goes into that? What's been giving you that opportunity to grab market share?
Yeah, I think what we did with our strategy is we identified those areas of our business where we have a clear right to win, competitive differentiation. That's North American retail and EMEA hospitality, and we doubled down in our go-to-market efforts, building up our sales organizations with outbound reps, as well as doubling down on product investment. So an additional $50 million in product investment this fiscal year alone, and so just the investment in all those outbound reps. We have 130 of our 150 planned outbound reps deployed now. We're ramping those up, and we're starting to see early results in all the customer wins in our key verticals in those growth engines. And a lot of that's being funded from our rest of world efficiency market, which is where we're retaining revenue and is helping us fund all of that growth.
And I guess, Dax, obviously we talked about the health of the consumer. I would say that, interestingly, despite all the uncertainty in Canada, there's still been a good amount of spending. I would say, arguably, it sounds like, despite the fact that maybe the U.S. economy is perceived to be in better shape, we often talk about the U.S. consumer being a little bit more cautious as well now. You guys are on the front lines of that. You're talking to the merchants and all that kind of stuff. Can you give us a sense on what business is like at the storefront and how that's playing into demand for your products or services?
Yeah, same-store sales in this quarter were stronger than the previous quarter. There was a lot of, talk in the media about trade and tariffs, and so we did see some deterioration in Q4. But in Q1, that bounced back nicely, and we see, strong consumer confidence, and that's helped our transaction volume. That's about 65% of Lightspeed's overall revenue, and so we saw it return to healthy levels, even more so in the European hospitality market, which is one of our growth engines.
All right, and I guess as you've been on this journey to focus on getting the business where you'd like it to be, what remains on the checklist, Dax, now that you've sort of been executing some of these new strategies?
Yeah, well, the momentum is certainly there. We're excited about publishing results that are ahead of expectations. I think it's the customer locations being able to continue to win market share that's really going to excite investors. We're seeing a lot of positive progress in that area, and we just need to keep executing. This is we're all heads down. Myself, the C-suite, all the team at Lightspeed all around the world, just heads down, executing and making sure that we deliver on the strategy. And Q1 is a sign that we're doing just that.
Interesting. And then I guess on the use of capital, let's put it that way. I think we've had some sort of past conversations when you ultimately made the decision to sort of remain as a public company, focus on that growth, but also on things like buying back stock and the like. How are you making the decision between where you allocate capital right now?
Yeah, we made a commitment when we had our capital markets day in March. We had a board authorization of $400 million in share buybacks. Obviously, we have a lot of conviction in our strategy. We've executed on half of that, and that's accretive to shareholders, very shareholder friendly action. I'm the number 3 shareholder. So I think that's an area where we can show confidence in our plan, and I think Q1 does that too. It shows where we're headed, and that we can execute. This is a disciplined strategy that we're embarking on, a disciplined transformation, and this is the first innings.
And we have had an increasing focus in the market around AI. The U.S. example that a lot of people have been paying to during earnings season is for the big players in Silicon Valley. If the spending that they're putting towards AI can help their business, then investors seem very much okay with that. Whether it's with Meta, with advertising getting a boost from AI, or with Microsoft getting a boost in enterprise sales directly tied to AI. How are you thinking about the amount of artificial intelligence that goes into your business and the net benefit that you can see financially from that in a reasonable amount of time?
Yeah, so we've been, another big story this quarter is us increasing margins. So there's a lot of operational efficiency efforts throughout the company. We've got AI being leveraged across support, sales, in our engineering groups. So there's definitely that story that you're already seeing materially in our numbers. We're being very aggressive on pushing AI throughout the organization, but also we're delivering a lot of AI-powered tooling for our customers. We just launched a generative AI website builder for e-commerce, Benchmark and Trends, which is a tool for restaurants to be able to compare their restaurant to other restaurants in the neighborhood. Lots of tools in the back end to remove repetitive tasks, and also insights regarding stock ordering. A lot of our customers have a tremendous amount of inventory, and we allow them to connect with their suppliers as well. So all that data is being fed into AI modeling so that we can offer better insights so that they can do better inventory turns and be more profitable.